In today's video, you'll learn how to buy the SPYs during an intraday market pullback. I will walk you through a few scenarios, so hopefully you will be more prepared to take action next time you see a similar setup. We have put together a 2-hour free workshop where we review 3 of the top trading setups from our prop desk in New York City. As earnings season is approaching, we're actually getting to the middle of earnings season. It's really important to understand what the best short-term setups are. Also in the 2-hour workshop, we walk you through our process of stock selection. It's extremely important during earnings season to understand which stocks you should be trading each day. I spend 30 minutes in the workshop walking you through my process to make sure you're in the best stocks. So click on the link above, sign up. You have several times you can sign up and check it out. When we're thinking about buying the SPY in a pullback intraday, we want to understand what type of market we're in. Recently, we've had a really hard sell-off in the market, so volatility has moved up quite a bit, and so we're going to trade quite a bit differently than we would in a less volatile regime. So for example, from May 1st, the first week of May, all the way through Labor Day, we were in a low volatility regime. The way that I'll trade the SPY in a pullback in that time period, or 2017, where the entire year was low volatility, is very different. It's very simple. There's usually only one spot to buy. You put in your bid, you're all in, and that's pretty much the trade for the day. What we're talking about now is after the market has had a significant pullback, volatility has gone up quite a bit, and there's usually going to be intraday several setups. And so that's something to keep in mind as we're looking at each of these days as we look at the charts. We're going to talk about how much room you should give your stop. That's also obviously going to be dependent on the volatility regime we're in. It's a high volatility regime, so we'll talk about that. And then also a couple more things. Number one, targets. We'll go through that. And then finally, probabilities. As we walk through each of these days, I'm going to give you spots to buy in a pullback. Not all of them are equal trades. Some of them are a higher probability, and you want to hold for a bigger move, and I'll try to cover that as well as we go through. So the first thing we want to look at is the multi-day. Here's a picture of the market sold off pretty hard from the 280s in the SPYs, came off to the mid 270s on day 1. On day 2 it bottomed, and then we had a few days of consolidation before we started to move higher, until finally today we had another pullback. And so what I did was I grabbed a chart from each day after the initial sell-off downtrend day, and I kind of gave you a couple of spots where I was looking to buy the SPYs in a pullback. So here's day 2 after the market sell-off, and what we can see is I've got a couple of spots that I'm looking for on day 2 to buy. And so ideally, after a big sell-off on day 1 and a trend day, I'd like to see the market gap up, and then I can see what happens as it pulls in to an important level from the prior day, or in this case, overnight lows and support. So day 1, we came into around 276 or so. And then in the pre-market low around the London Open, we had 274. So I had 2 prices I was interested in taking a look at, 276 and 274. When the market gaps up, I can then look to do a pullback right on the open into either one of those levels. And so in this case, we were gapping up to around 277, 278, and when we pulled into the prior day's close, 276 was looking to buy. We actually sliced right through that and came all the way into the pre-market low, and that was a pretty good setup. You can see it's the second blue line, the lower level there. We pulled in, and then what I'm looking for is a bounce basically back up to our first support level and kind of see what happens there. When I get in at that pre-market support, I'm looking to take off half the position as soon as we move maybe a third of an ATR to cover my risk, and then I'm looking to take off more as we bounce into our first support level, and then I'll just trail a stop from there. If it turns out that that's it for the day and we're going to have a hard reversal day, at least I have a trailing position where I can play it up to the morning high and then see what happens. So in this case, you can kind of see we bounced, we went up to our support 1, we got above it, and then once we got back down below, all hell broke loose and we got crushed. So now we're looking at day 3. What we're looking at on the left is day 2, and then on day 3, I want to use levels from the prior day to potentially look for spots where we'll catch a bid. So the first one is where it broke out from, pre-market resistance on day 2. And you can see it comes back in right on the morning of day 3. It holds there, it pops up, and then it fails. So we just take our loss. By the way, in the heightened volatility, if I'm buying into support, I do not want to risk more than 30 cents. In a low volatility environment, I may risk 10 to 15 cents. I'll double that in a higher volatility environment. So you can see it pulls into that first potential support level. It pops a little bit, enough to take off maybe a quarter of the position, but then you're stopped out of the rest. And then we have our next level, which is 274. It's a large technical level, and it's also the morning low from day 2. That one actually comes in and fails as well. And then we never get to our next pullback level, which is 272. It just never quite gets there, so there's no buy that ever gets triggered. I want to go to the next day. So on day 4, we're actually gapping up, and I'm going back on day 3, and I have morning support, and then I have afternoon support. And as we gap up, because we're gapping up, the first thing I'm looking at is buying at the prior morning support. That actually works. Comes into that, we go up a couple of dollars. Generally speaking, I'm not looking for more than 1 ATR in these situations. And so in the SPY, even a half of an ATR to take off half the position, which is about $1.50, is pretty good. And so I think in this case, it actually popped about 3/4 of an ATR before reversing and coming in. And then the second spot to look at is in the afternoon when it pulls into the prior day's afternoon support. And that trade never really triggered because it didn't trade down there till the end of the day. So you're not going to buy something like, if you're looking to buy a pullback, it's generally first thing on the open or by the middle of the day. If something is just moving down at the end of the day, you're not really looking to buy it into the close into that level because there's not enough time for it to balance. So that was day 4. The next day is day 5, and this is when we actually had a large uptrend day, and there was no real pullback on this day. We kind of opened up, we gapped higher, and the first move was up, and people were looking to trade it on a breakout above the prior afternoon resistance, and there was only one very small pullback. Now, this is different than the other scenarios. In the other scenarios, the market had been weak and it was trying to find a bottom. In this case, we actually had the market moving through recent resistance levels, and so buyers were starting to take control. And this was the most aggressive the desk was on the long side since the initial day 1 sell-off, because we took out the day 4 resistance where we had failed twice. You can see that very clearly there, coming into 277, and in the morning we got above it. Once we got above that I guess it was actually 276.5, that resistance, we went about 70, 80 cents through. Everybody was looking to buy into that pullback. View up was actually right. Luckily, it lined up perfectly with day 4 high. It pulled in there, then took out the morning high, and then it was a trend day. And so this is a very high confidence pullback. On the other days, you're kind of feeling it. The market's still trying to find bids. It hasn't shown strength. This is the first day where you can see it's gapping higher, and not only is it gapping higher, the first move is up. And the first move actually takes it above the prior day's high, so buyers are in control. And so these are the situations, other than a low volatility environment where the market's trending higher, once you get higher volatility, you want to see strength, you want to see resistance from prior days taken out. Now, the people who are being more conservative and looking for strength, not just the people such as myself who are like perfectly happy to look for signs of a bottom. These are the second, third, and fourth tier people, waves of buyers coming in, and so you have kind of the sales at your back now. And so this is a high confidence buy. Once it gets above 277 and pulls back to the prior day's high, you can buy there and maybe even give it a little bit more room, maybe give it 50 cents of risk because you feel like the buyers are starting to take control. Maybe you can capture a bigger move to the upside. And you got about a $4 move from that small pullback there, basically to the close. You got about a $4 move, and that brings us into the next day where this is another high confidence pullback because buyers have finally taken control. They've taken the market up to 281. we know, and what we said in the morning meeting this day was basically like, okay, we're opening above 280. It's frothy up here. We've just run from 276 to 281. We want to basically get a pullback to 279 to 278. As long as we can hold above 278, we can potentially retest the high from the prior day, which is 281, and maybe this is the beginning of a bigger move to the upside. And so when the market on the open came off 279, I got pretty aggressive as we got closer to 278. And once we started to stabilize there at 278 and work my way back up, I was using 279 as a spot to basically take off a significant chunk, and then understand at that point, let's see what happens. Does it get up to 279.5, 280? Does it go up to the prior day's high of 281? And understand at that point, once you've covered your risk with the buys into 278, that you should just let it ride and see if it can go to the prior day's high. So this is another one where the prior day, uptrend day, we want to be aggressive on the open if we can capture a pullback. And the 278 also lined up with, if you can see, the move on the open, the first move on the open, which was about a $2 up move, it consolidated, and then the second up leg started right above 278, which took it all the way to 279.5 or so. And the third up leg was to 281. And so those things lined up really nicely. So that brings us to today, which was day 7 after the initial sell-off. And I was looking for a pullback into the same spot as yesterday. We were actually gapping down on the open. And so we were pretty close. You can kind of see we didn't quite come into the prior day support area, which was 278. And we popped a little bit, and then we came in hard, looked for it to hold there. It sliced right through, and this is the day where we kind of changed our thought process, which was we didn't hold 278. We didn't even come close to holding it. We went like $1.50 through it, and then we bounced back up. And so we changed our bias when we got a retracement. Support from the prior couple of days became resistance. People put on their short caps, and we came off a few dollars from there. And so general point is, when the market sells off hard and then it tries to find a bid on day 2 and day 3, we're thinking the market's going to find a bid, it's going to bounce. Once it's bounced for a couple of days and it got, in this case, about $10 or $11 off the low, if it fails at support from day 5 and day 6, we can then start to change our bias a little bit to the short side and understand to change your bias, you want to see a hard down move from the support from the prior couple of days. Once you see that hard down move, what you'd really like to see is a retracement back up to that area where we were buying the last couple of days. And if it fails there, then we're looking for further downside. But this was kind of my thought process, the quick version of my thought process after the big downtrend in the market. And understand that if you understand the prior days potential support areas, and you understand where the prior day's resistance areas were, you can have a good sense of whether buyers or sellers are in control and whether or not you should still be looking for pullback buys or flip your cap to the short side.